4:30 in London, a quick recap of the main events of the day and a quick look ahead for tomorrow. European futures, a little bit mixed. Euro stocks obviously slight negative now, but the DAX still holding on to some marginal gains, having found a little bit of support at the pivot level. You can see in the center left chart. Otherwise, US equities have drifted lower really in the last hour or so. No real one fundamental catalyst, but obviously North American participants rejoining us for the first time this week, given the fact they were out of the market for Labor Day yesterday. So a little bit of interpretation still on the Korean situation. You've had a couple of Donald Trump tweets, nothing particularly inflammatory, but did say that I am allowing Japan and South Korea to buy a substantially increased amount of highly sophisticated military equipment from the United States. This coupled with his comments from yesterday about increasing the toughness of sanctions on North Korea. So it's still there, it's still a present issue in the marketplace, and generally speaking, gold, although it's been pulling back here, you can see in the top right more recently, is up around $9 on the day. We did get close in gold at one point to retesting up at the high that was seen during the Asia Pacific session, and then the post-Korean kind of gap higher that we had. The initial high that was seen there yesterday morning when we first came into the market to react to that development of the weekend was up at 1345.5. So still elevated in gold, but off its best levels, but taking a bit of a boost. Strength also seen in the Japanese yen, so dollar yen has generally trended lower through the European kind of second half of the session. That with the pullback in the US equity market, with all three major indices now lower on the day, helping support fixed income futures. Couple that with T-notes breaking out of the fairly tight range that we were trading in yesterday's session, which was defined really by these price points here, so 126.24 to 30.5. Break above that, the R1, and even here this was the payroll spike activity that we had initially, was the knee-jerk reaction. Obviously US yields plummeted on the back of the kind of clean sweep of negative information from payrolls, but that being decidedly short-lived. But that payroll's high now, providing what looks like a bit of support. Now the resistance was broken at that 27.07.5. And so the 10-year, 19 ticks, pretty decent move on the session actually. But with equity markets, as I said, we've gone through the European cash flows and they've taken a bit of a turn off the lowest levels. Quite a key technical level of support just holding up in the SPOOs here at that gap lower that we had on Korea, that initial futures low that we saw on the volatility on Sunday evening when markets reopened for the first time to digest that news. 24.60 we pretty much got to that, about half a tick away from it, or half a point I should say. Before then we've rallied back up to S2, and actually that then hitting the first target of the strategy that we had in place for the S&P on the intraday. Elsewhere, oil's seen a pretty strong rise on the day. There's not been a great deal. There's a couple of people looking at weather patterns. It's moved on from Harvey, and now people are talking about the new one, Hurricane Irma. But Irma's probably not so influential for the price of oil. It's more influential for the price of orange juice. Now, that's because here, plotting on the National Hurricane Center, this is the current situation. But this is the path over the coming days going into the weekend, where if you look at the state of Florida here, it's actually the most southern tip of the state, which has most of the agricultural land that's associated with the production of orange juice. And so prices are already starting to be bid in that particular product ahead of the anticipated disruption to supply that's going to occur with this weather pattern and the course that it's on. In terms of WTI crude though, probably a lot of it technical, dollar weakness as well, maybe lending a hand. The Dixie's down about a quarter or 0.3%. Just having a look here, that dip that we were taking last week on the reduction of demand due to Hurricane Harvey knocking out a lot of the onshore refining capability on the Texas coast, that now completely taken back. and in fact break of that high that we printed late evening kind of on the 23rd, 48.50, just causing a bit of a trigger for another move on the upside, and here we are up, finding some resistance now pretty much right on the $49 handle. Obviously 49 going back, slightly longer dated chart here. These were levels of resistance we were looking at earlier. This was the 18th and 21st high, so still holding up relatively well at this point, having briefly got about 9 cents or 8 cents above that. Both that level in combination with the psychological handle maybe just providing a good point here to stop some of this recent run on the upside. So that was crude oil. In terms of data, just to summarise what we've had in the session, first thing first was from the UK. Now, didn't really see much reaction to this because ultimately it didn't differ too much from market consensus. It was only 0.3 weaker than expected at 53.2. This was for the service PMI in the UK. The reading, though, did point to its slowest expansion in the service sector since September last year. Business activity and incoming new work eased and remained notably weaker in the first half of 2017 amid subdued client demand, heightened uncertainty about domestic economic outlook. The head economist of Market, who compiled the data, also commenting about the uncertainty surrounding, of course, the Brexit situation. Irrespective of that, though, of course, sterling has risen. At the time of the data release, there was a bit of very short-term selling pressure that came into cable. This was around the time of the release, was here, and actually we ran down to close proximity to the S1 level, which technically as well was a pretty good level of support, given that that was the low that was seen on Friday morning ahead of the then move higher that we had on the back or in a run into non-farm payrolls where the dollar originally weakened. So we continue to move higher, and in cable actually it's a multi-week high, I believe, that we're trading at the moment. So irrespective of uncertainty seemingly over the lack of progression on the Brexit talks, given the end of that third phase that ended last week, you can see here on the longer term chart, so if you're sticking around in the evening, that R2 level fairly significant, 130.48 in the futures. That's also the 11th, Friday the 11th high was seen pretty much at R2. So yeah, putting into context, it's kind of going back to really the first week of August, so when we were last up at this price point. But again, dollar weakness has really been the telling story rather than, I'd say, pound strength, because that's also helped euro dollar as well maintain positive gains on the session. The other things that we've had from the States, you've had the factory orders number, and in fact this was, although it looks like quite a large drop-off here on the 12-month basis, and if we go back and put this on a 5-year, for example, it is in fact one of the worst readings we've had in a while. It's the biggest drop in new orders since August of 2014. However, it was in line with expectations. Markets were anticipating that drop to come. We've also had ISM New York Index, still above obviously the key 50 expansionary level, but has dropped off fairly significantly at 56.6 from July's 62.8 reading. So North American data, not I'd say surprising, but certainly a slight deterioration from what we've seen on prior occasions. This as well in combination with comments out of Fed's Brainard. She's one of the most dovish members of the Fed. And with this idea with T-notes rising today, the dollar weakness that we've had, a couple of people have been looking at the comment that she said the Fed should be cautious on rate hikes given long period of low inflation. Inflation is well short of objective. So obviously these sit much more on the dovish end of the spectrum, although she did go on to say that they should go ahead with the balance sheet tightening exercise in September. So not too dissimilar from what she has said before, but obviously a lot of people have been pinning that as one of the main catalysts to create some of the movement in US yields in the dollar in the latter half of the session. Okay, looking at the calendar for tomorrow, just to wrap up, we have overnight, you've got Aussie GDP data, so 2:30 in the morning that will occur. Coming in first thing in the morning for European traders, you've got 7 a.m, the Eurex Open, German industrial orders, and otherwise very quiet in the for the latter morning. Looking ahead to the US session, The headline readings are going to be US trade balance. We've also got the same reading coming out of Canada. Then going forward, ISM non-manufacturing, as well as the market service PMI. So 2:45 and 3 o'clock respectively. You've also got, as well for any FX traders, the Bank of Canada rate decision. Of course, they always release their monetary policy report alongside their actual rate announcement. So it's always a volatile affair and something I'm sure currency guys will be keeping an eye on. Just before I finish the wrap, if you are sticking around for the rest of the session this evening, although there's not a great deal coming out on the economic data front, remember, owing to the US bank holiday on Monday, the API crude oil inventories will be on Wednesday night. That means Department of Energy's inventories are on Thursday afternoon. But later on this evening, 6:10, you've got Fed's Kashkari, of course a voter, speaking in a town hall with a Q&A session. And then you've got Fed's Kaplan. Sam? You've got Fed's Kaplan speaking at midnight. So if you are going to be aware of monitoring the FX markets at that time. Okay, guys? I'm going to leave it at that. So I hope you have a good day. And I'll be back on the briefing as per normal tomorrow morning. Enjoy your evening. Thank you.